Welcome to Illuminati Silver. We tell you the truth about silver. With gold currently trading at $2,023, the same as our year 2023, and silver trading at $25.65. We ask the question, why should you, or anyone for that matter, invest in gold and silver? And also why it is becoming increasingly popular. Well, let's take a look. Gold and silver investing can be attractive to the public, particularly during times of economic uncertainty or when there is a perceived risk of inflation or market volatility. Both gold and silver are considered safe haven assets that can provide a hedge against inflation and protect investors' portfolios in times of economic turbulence. Gold in particular has been a popular investment for centuries due to its rarity, durability, and historical significance. It is often viewed as a store of value that can hold its worth over time, and is commonly used as a hedge against currency devaluation. Silver, on the other hand, is a more affordable and accessible precious metal that is also viewed as a potential hedge against inflation and economic uncertainty. However, it's important to note that investing in gold and silver is not without risk. Precious metal prices can be highly volatile and subject to market fluctuations, which can result in significant price swings. Additionally, physical gold and silver investments require storage and security measures, which can add additional costs. Overall, while gold and silver investing can be attractive to some investors, it is important to carefully evaluate the potential risks and benefits before making any investment decisions. Now, here are a few factors that make gold and silver investments appealing to a number of individuals and institutions for that matter. First of all, store of value. Gold and silver have been recognized as stores of value for centuries. They are tangible assets that are not subject to the same risks as fiat currencies, which can be influenced by inflation, economic instability, or political factors. Many people view gold and silver as a way to preserve their wealth and hedge against inflation. The second appealing attribute is diversification. Investing in gold and silver can provide diversification benefits to an investment portfolio. Precious metals often have a low correlation with traditional financial assets like stocks and bonds. This means that during times of market volatility or economic uncertainty, gold and silver prices may move differently than other asset classes, potentially reducing overall portfolio risk. Third is safe haven assets. Gold and silver are often considered safe haven assets, meaning they tend to retain or increase their value during times of economic and geopolitical turmoil. When investors are concerned about the stability of the stock market, global currencies, or political events, they may seek the perceived safety and stability of gold and silver. And the next are tangible and portable assets. Unlike other investment options, gold and silver are physical assets that investors can hold and possess. Some people prefer the tangibility and portability of these metals, as they can physically own and store them. This can provide a sense of security and control over one's investments. Now, it is important to note that the attractiveness of gold and silver investing can vary among individuals and may depend on factors such as personal financial goals, risk tolerance, and market conditions. Additionally, of course, it's always advisable to conduct thorough research and consider seeking professional advice before making any investment decisions, whatever they may be. Now, as we've already mentioned, there are advantages in investing in gold and silver, but it would be wrong not to also consider the potential disadvantages, and then one has to weigh up the one against the other. So here are a few drawbacks to be aware of when investing in gold and silver. 1. Lack of income. Unlike stocks or real estate, gold and silver do not generate income or dividends. They're considered non-income producing assets, which means their value relies solely on price appreciation. Investors who prioritize regular income may find this aspect of gold and silver investing less attractive. 2. Volatility. Precious metals, including gold and silver, can be subject to significant price volatility. Their values can experience sharp fluctuations over short periods of time, making them potentially risky investments. One only has to look at 2011 and those who bought gold and silver at peak prices, and it had taken virtually 10 years to recoup from that purchase. Admittedly, over the longer term, it is very much achievable, but over the short term can be quite frightening. The volatility of gold and silver prices can be influenced by factors such as economic conditions, geopolitical events, and investor sentiment. 3. Storage and security costs. We touched on this earlier. Physical gold and silver require secure storage to protect against theft or damage. This can involve extra costs, such as purchasing a safe or renting a secure storage facility. If investing in exchange-traded funds or ETFs or other paper forms of gold and silver, there may still be costs associated with custody and management fees. 4. Limited growth potential. The pumpers won't like this one. While gold and silver can be stores of value, their long-term growth potential may be more limited compared to other investment assets such as stocks or real estate. Over extended periods, the performance in gold and silver may not match the growth potential of productive assets that generate both income and profits. 5. Market manipulation and counterparty risk. The precious metals market, like any other financial market, can be subject to potential market manipulation. Investors need to be cautious about fraudulent schemes or illegal activities that may affect the value of gold and silver investments. Additionally, when investing in paper forms of gold and silver, there is a degree of counterparty risk, as the investor relies on the financial institution or entity to honor their obligations. And 6. Limited industrial use. Unlike some other commodities, gold and silver have limited industrial use beyond their role as precious metals. This can make their value more susceptible to fluctuations in investor demand and sentiment. And as a broad rule of thumb, what we've traditionally seen over the years is that approximately 10% of the gold supply, maybe as high once, close to 20, but never quite, I don't think, reaching there, has been used for industrial purposes, and somewhere between 50 and 60% of silver production is used for industrial purposes. So, in conclusion, it is essential to carefully consider these disadvantages and weigh them against your investment objectives, risk tolerance, and overall investment portfolio. As with any investment, you need to conduct thorough research and preferably seek professional advice, as well as diversifying your portfolio to mitigate some of the risks associated with investing in just one or two asset classes. That's it for now. Of course, all of us on here are gold and silver bugs, which is why we're on this channel. But that said, it's always worth understanding at least the potential downsides of all forms of investment, as well as the upsides. Thank you for listening. Please give us a thumbs up, subscribe, press the bell sign. If you haven't done so, also subscribe to our Finances Do Matter channel, link in the description box below. Have a great day. We'll see you soon.